Yo, what's going on everyone? I hope you're all doing really well. So I'm going to make this video on the difference between probabilities and certainty. So what I mean by that is understanding, you know, what price is actually doing and sort of understanding that it's things are happening for a reason and it's not just, you know, random sort of price movements and random sort of flag patterns. There's a deeper sort of concept to it, and we know this, but I'm going to do this video, showcasing a really very clear example of the difference between retail, different communities where they're looking at certain trades, and us being traces of smart money, understanding what price is doing and why it's doing it. So I'm on Euro USD, and I just want to look at this sort of bit of price in here. Okay, so if we look at this move here, what we can see is price impulsively, we can agree this is an impulsive leg down, a few wicks here after this impulse, but all of these candles apart from these two, they're putting in lower lows. We have a nice impulsive candle here, and what we can see with this move here is retail would be looking at that as a few wicks that you could account for or not, but it's clearly a bear flag, with 1 2 and touches at the bottom. We can identify that as a clear bear flag, so that would be the pole and that would be the flag. And other communities trading in patterns or whatever it may be, they're looking to get involved somewhere up here, nice bearish retrace, and stop loss would go 15, maybe even 20 pips. Let's go 18 pips, which is above that flag pattern, above the high. And you can see what happens. The price does go down, and the reason the stop loss would need to be 15, 20 pips is because it's not a real understanding of price and what it's actually doing. They can't have the precision of say a 2 pip stop loss like we can, because it doesn't allow you to do that. Okay, so price does come down, but then we put in this low with a wick, we then range inside the wick, then we push up. This is what we would be, as smart money traders, sort of anticipating or even expecting, because we know that this up here is an area, a very clear supply zone where price is going to gravitate towards, and take people out who are looking at this as a bear flag, because this hasn't been printed just out of luck. This entices people in. They see an impulse down, bear flag, pushes down, but then look, comes back up. It taps into smart money, clear supply zone, and this there's no saying that this isn't going to go short. It's clearly going to go short, because we're clearly bearish, all the way from back up here. If you go through this bit of price action, even up until today's current date, look how price is respecting these areas. Okay, so we have this area here, broke structure, we didn't come back into it, but then we have another one here, break of structure, mitigation, break of structure, and this was the move that we sort of I forecasted, and we took advantage of this mitigation. Another break of structure, we have another area here, inside bar, last up close candle, mitigation. And what we can also look from with this move here is, I know I'm quite zoomed out, but we have the last up close candle. We came in to wick it, but then we came in to mitigate fully to the 50%. Okay, then we went short again, and we have the exact same thing here. We didn't come in to the 50%, but we still look for entries within this. And if you didn't if you didn't get involved with an entry in here, then what do we have next? We have another push up, break of structure here, and we have the last up close candle refined to this candle here. And you know, we have entries within that, and then even more entries here. So, you know, this is literally the difference between probabilities, you know, patterns, which are going to work from time to time, because that's the whole point of it. It entices people into the market. They see it play out once or twice, and they think, oh, that must work, when really we know it doesn't. Not to its fullest potential of, you know, how we're trading, where, you know, we're looking for where does price need to go before a clear move can happen. So where does price need to go to get fuel, grab liquidity from these retail traders trading these flag patterns. And you know, this is why we can be so precise with, you know, a 1 pip or 2 pip stop loss, because we know what price is doing, and we can utilize the lower time frames to even refine it even more. This is why we can get in entries like this, you know, as tight as that, which makes complete sense, as opposed to this, you know, with 20 pip stop loss, just trading out of pure probabilities. And you know, understanding there's more to it. So I thought I'd just do that video, showing you sort of the difference between probabilities and certainty. And that being said, it's not always going to be certain, as we already know. We still do take losses, but you know, when we're getting in trades, you know, 1 to 25, 1 to 50, small losses like 1%, it doesn't do any damage at all, because we know the true potential that we have. Even all these trades I'm looking at here, there's loads of opportunity day in, day out. It's just about seeing where price is likely to go to, the why, and you know, getting involved.